Welcome to the Investors Trading Academy weekly market review and update. Beginning this week, we have separated our review from our upcoming events. The stock market rally continued Friday. Traders seemed to be worn out after a week of activity. Investors found comfort in the May jobs report, which showed job growth for the fourth straight month. The Nasdaq gained 0.6%, while the S&P 500 and Dow Jones Industrial Average rose 0.5% each. For the week, the Nasdaq gained 1.9%, the S&P 500 rose 1.3%, and the Dow rose 1.2%. Preliminary data showed volume on Wall Street coming in lower than Thursday's levels. May non-farm payrolls increased 217,000, in line with the consensus estimate of 213,000. The unemployment rate was unchanged at 6.3%. Meanwhile, the labor force participation rate, the percentage of working-age persons who are employed or unemployed but looking for work, was unchanged at 62.8%. Europe's main stock markets advanced on Friday as traders welcomed data that showed the U.S. economy has recovered to a pre-crisis jobs level. In a move hailed as unprecedented by analysts, the ECB lowered the rate at which it pays commercial banks for depositing their unused cash into negative territory for the time, cutting it from 0% to minus 0.10%. This means that banks will be charged for parking funds at the ECB, which hopes they might lend it on to businesses and consumers instead. London's FTSE 100 index of top companies climbed 0.66%, while Frankfurt's DAX 30 tacked on 0.40%, and the CAC 40 in Paris added 0.71% to close at a new record high for the year. Madrid jumped 1.73%, and Milan shot up 1.54%. This week, the US dollar came back to life, climbing as high as 80.70, ahead of the ECB announcement after strong US data showed a steady recovery. The Federal Reserve released their Beige Book, which stated that the US economy was making a steady recovery except in the housing sector, but the jobs data showed a strong rebound in jobs creation. The main market focus for the week were the ECB rate decision, where Mario Draghi pulled out the big guns and went into uncharted territory of negative interest rates, forcing banks in the Eurozone to loan out all the cash and not park it with the central bank. The European single currency drifted up, while the euro slipped against the pound. The British pound rose, ending the week on a downward note. Japanese yen returned to its 2014 trading range, ahead of the Bank of Japan meeting this coming week. The Australian dollar remains higher on the back of the European Central Bank stimulus measures. Gold futures settled lower today, but recorded a modest gain on the week after a U.S. jobs report largely met market expectations. Gold shed 0.1% on the COMEX division of the New York Mercantile Exchange. Tracking the most active contracts, prices were up roughly 0.5% for the week. In other metals, silver fell 0.4%, prices were up about 1.7% for the week. Oil prices finished evenly mixed, with the main U.S. futures contract getting a boost from a solid U.S. May jobs report that raised expectations for a stronger energy demand. West Texas Intermediate rose 18 cents. Brent North Sea crude fell 18 cents in London.